We've got liftoff for stocks this morning as the Nasdaq rips higher. America and Ukraine agree on a minerals deal, which is a good omen for the peace process. However, in small text, Russia and Ukraine remain far apart. Trump this week marked his first 100 days back in power without having ended the Ukrainian war, as he had promised to do so on his first day. That was a pretty aggressive take, even for him. However, perhaps late is better than never, and it seems like we've got some good progress here. This morning, we also had some really good news for the market in the form of our manufacturing PMI number, which came in better than expected, showing that the manufacturing component of the economy is expecting to do a little bit better than people were fearing. A reading of 48.7 compared to a forecast of 48 by economists shows there's a little bit of upbeat expectations from this part of the economy. And so we see up and away here this morning for the Nasdaq, with our indices on the right here showing a 1% gain for the S&P, a 1.1% gain for the Nasdaq, and a 0.8% for the Dow Jones. And don't forget the Russell, up 1.5% today. And for gold traders, you may not be surprised to see gold is lower today. Remember that war is a positive catalyst in a weird way for gold. When people are uncertain, people buy gold. When people are scared, they buy gold, right? When people are feeling a little bit more stability, they actually do the opposite. So we're seeing gold down about 2% today off of this good news in terms of the Ukraine and US relations. However, from a big picture trend, gold is still very well supported here. And in my opinion, this is a much needed pullback. I actually had a long position on gold. I've discussed this a lot recently. I stopped out here this morning, took my loss, and moved on from that trade. Of course, this is why trading is very difficult. At the end of the day, we never know when peace deals are going to get signed or something drastic is going to hit the headlines that shakes up our trade completely. So even though I liked the gold trade that I took, I did take it on a small size because I did acknowledge, if you go back and watch my videos, that it looked a little bit stretched already. Now we are seeing follow through to the downside, which was a signal to me to go ahead and take a controlled loss on this idea. And so here's the final P&L on that trade. I realized a loss of $5,200 today on my gold trade. However, we're still up pretty nicely today because many of the stocks that I've been recently buying are up very well on the day. So what's the next step for gold for me? Well, if I take a look at my top setups page, what you'll see is that gold is currently not really on the list. In fact, gold has dropped to a neutral reading. So I'm going to pause on aggressively buying gold from here until I get a better signal from the edge finder. Another chart I've been watching and established a position on today is the euro dollar. And acknowledging that this is a bit of an aggressive first attempt, I'm long here at 1.13 or so, and my plan is to add actually a second euro and potentially even a third euro long if we do get a larger pullback on this, what I think to be a sustainable overall uptrend. This is a dollar cost averaging approach for me, so I actually do not mind whatsoever if we can get some even better prices on the euro. If we go lower, I'll stack a little bit more size to my position. In terms of targets for the euro, at the very least, I'd see a push back to the highs being appropriate, but I do think we could put fresh yearly highs for euro, pound, etc. I'm also closely watching the Kiwi against the US dollar or the New Zealand dollar. I'm looking for a pullback to the 38.2% retracement, somewhere around this 5,800 level for a possible entry here, as long as the edge finder is still giving me a confirming bullish signal, which you can see right here. Let's now talk about the Dow Jones and the Nasdaq, both getting bullish readings and very strong today. So first up, we'll talk Nasdaq, which looks absolutely beautiful here on the daily chart. We've got a clear and obvious breakout to the upside, and just when the world thought this thing was going to crash, look at what the market did. And I just want to take a second, not to say I told you so or anything like that, but if you watch my channel, I've been doing this for a long time, and this is a story that plays out over and over and over. I'll tell you the story in a nutshell. First, the market starts to sell off, and people start to absolutely panic. They say, what's going on? Should I sell all my stocks? You know, Trump's going to send us into a recession. It's all over. Step two, people start to panic sell, and the market absolutely craters, and people are fully convinced that they should sell all their stocks and start buying puts and start just going super risk off in the markets. And just at that time, we typically see it start to show up in the put to call ratio, one of my favorite sentiment indicators, because it shows that people rushed into buying puts. Now, when this goes very high, it signals huge demands for puts, which are bearish bets in the options market. So what this indicator shows us is that when everybody wants to buy puts, the value of puts goes up substantially, and the cost of buying them skyrockets. This cost, known as premium in the options market, is similar to when you buy insurance. Buying puts when everybody else already has is like trying to buy flood insurance after a flood has already happened. As you can imagine, flood insurance is going to be way expensive after a flood occurs. So I watched this indicator very close. And if you watched on my channel at this time, I was banging the drums when it comes to talking about how everybody is panic selling. Don't be one of them, because oftentimes we see a bounce. It's not a guarantee that the market's going to reverse, but I've seen this story play out so many times. Guess what happens next? The bears get really loud. And I'm talking, they come to my comment section and they call me a dummy for being bullish, or tell me I'm going to lose all my money being long, or that this market is crashing to zero, or Trump's ruining everything. You start getting the real doomsdayers coming out really loud. And just as everyone is fully convinced that the market is headed into a recession and going lower for the next few years, the market absolutely rips. And again, we start to see everybody who was on the bearish side double down. They say it's going lower. This is just a fake out move. It's going to crash. Everyone who is super bearish is fully convinced that it is, this is not the low, right? It's not over. I got so many comments on my channel, people saying it's not over, it's going lower, right? Sure enough, we put in some fake out to the downside. All the bears get excited, put in a higher low. And we, in the face of all those put buyers, watch puts expire worthless, and many of the bulls get heavily rewarded for taking the risk when everybody is too scared to do so. And I still think we are in that process today. I think that bears are still very convinced this thing's going back down to the lows. And while we may see it, I've seen this story play out so many times, and it is an incredible way to actually make significant money in my experience, playing the opposite side of the crowd mentality. If you'd like to get access to our indicators and tools like the one that I'm using here, the put to call ratio, our Edge Finder sale is ending very soon, and it is the biggest one that we do all year long. If you want to get access to the Edge Finder for 45% off, click the first link in the description to check out the tool, all of its features, and speak directly to a member of our support team who can answer questions about the tool itself and this 45% off discount before it ends. It is the biggest discount that we do all year long, and we're celebrating 3 years since we launched the product. So just when everybody was convinced that this market was going to fall off a cliff, we now see the NASDAQ ripping higher here, and I've got several stocks that I bought during this time in the face of that fear. Now, I know I'm patting myself on the back a little bit here, but this is something that, again, I have to reiterate. If you were that person who was like, no, I'm convinced it's going to crash, just be very careful for next time. When the headlines are screaming at you to sell your whole portfolio, just be careful. And speaking of the stocks that I recently purchased during all this crazy sell-off, let me show you some of the ones that I picked up. So I can actually go, and what I'm looking at, by the way, is the new A1 Trade Tracker available to Gold VIP members. If you are a Gold VIP member and do not have access to this, click the first link in the description of this video to speak to our team, and we'll get you hooked up for free. So if you look at this really quick, we go market type here, and I just select stocks, right? So I can look at all my current open positions. You can also look at Frank's. So these are all of my stock positions, and you can see we had some crazy changes here. Robinhood up 16%, Meta up 6%, right? Home Depot, Fortinet, look at Uber, I'm up 22% on this stock, right? Tesla, I'm up 22.5% on Tesla shares. So my point with showing you this is that at the end of the day, when everybody is fearful, that is typically a great time, in my experience, to look at stocks that you want to buy and to buy them for the long term. By the way, with this new tool, you can also see positions that I have in Forex or indices, commodities, etc. On the Forex side, I have my euro-dollar trade that I just took today, and then also my CAD Swiss positions, which are both in the red for now. And by the way, if you don't have that trade tracker and you would like to get access to it, just send us a direct message using the first link below. So I also mentioned I'd discuss the Dow, and take a look at this. The Dow Jones also looks really impressive here. We can actually see that across the indices, pretty much everything is breaking out of these downward trend lines that we've been watching. We also see that 90-day pause day breaking out for the Dow Jones today. This looks incredible, and stocks, in my opinion, have room to continue to move higher. However, let's talk about trading setups for things like the Dow Jones and the NASDAQ that I'm personally watching for. So while we're seeing some really nice price action for things like the Dow Jones and the NASDAQ, I'd still like to wait for some sort of a pullback before adding more to my existing positions in the form of an index trade. Remember, I mentioned I have a bunch of stock positions open, so I'm going to be selective with my index trades to pile on top of my bullishness in stocks. So specifically for the Dow Jones, I'd be pretty selective here. I'd be looking for something like this kind of move in order to take a position on the Dow Jones. On the NASDAQ, however, I missed my entry, and I would be lying if I didn't feel very much some FOMO pressures in the last day or two, because I missed my entry narrowly yesterday, and now it's run off without me. Again, I own a bunch of stocks, so I'm fine with the market if it wants to keep going, but I would like to add into a NAS long position if we do get a retracement, specifically back down to this key level. Again, this level has been my guide for the last few months. That is what I keep saying, that 90-day pause day, where we got the announcement, the market ripped, and then faded, put in this higher low, now putting in a higher high. If you give me a pullback into that area once more, I'm going to look for an opportunity to get long and to ride this momentum higher. Part of the reason I like the NASDAQ and Dow Jones ideas is because they are getting bullish readings within the Edge Finder. And specifically, we saw the NASDAQ get some heavy accumulation, as well as the Dow Jones in the latest commitment of traders data showing institutional money is buying these things. I think that what is happening right now is the Trump administration, which came out swinging on the tariff stuff, is now taking a step back and saying, well, we need to cooperate with the bond market, which I think honestly kind of scared Trump. Let's break down that concept just a little bit with the 10-year yield. Now, again, if you are somebody who really gets into the fundamentals, this will really help to explain what took place after the tariff kind of war broke out, if you will. And I am talking about, of course, a trade war, not an actual war. So April 2nd was our quote unquote liberation day. And we saw yields drop for a short bit, but then very quickly, what actually happened is yields skyrocketed for the US Treasury market. So what's so wrong with that? Well, if Treasury yields are skyrocketing, this goes exactly against what the Trump administration has set out so adamantly to do. Their big call to action is they want to get interest rates lower so that they can reborrow US national debt at a lower interest rate to help get our debt under control. That's the theory, at least. But the bond market came out and kind of sunned Trump, if we're being completely honest, because it said the bond market, the bond vigilantes, if you will, said, actually, you know what? We don't trust US securities. You're driving us off a cliff. This is really nerve-wracking, so we're going to sell treasuries, causing yields to skyrocket. And as yields rocketed higher in response to everything that was going on, just in time, Trump and team basically came out and actually said, well, you know what? They started softening up, right? Instead of being so hawkish on the situation, they seem to have stopped taking such a aggressive stance on things, discussing possible negotiations with China and making deals with other countries. Seems like they basically stepped down and want to be a little bit more constructive rather than just straight up smacking tariffs on everyone. Now, it doesn't mean that that tells us what the future holds by any means, but the bond market has cooled off a little bit and acted a little bit more normal since some of those backdowns from the Trump administration. This is a great example of how the market itself is kind of like the fourth wing of government. The market influences heavily what key political figures do. And even though the president is a very powerful role, they are still subject to what the market is saying. That means the stock market, the bond market, they might as well be the fourth and fifth wing of the US government. And just a heads up, if you don't already have access to the Edge Finder, did you know that you can actually get it completely for free with your 8-cap sign up? If you're someone outside of the United States and you don't yet have the Edge Finder, here's a great way you can get it completely for free. Basically, 8-cap will purchase a copy on your behalf if you make certain deposit thresholds within their platform. So some of the simple steps would be starting up an account using the specific link found in the description down below, depositing a certain amount, and then contacting their team. All of that information and instructions can be found by heading over to a1trading.com/8cap. That's a1trading.com/8cap. Chart of the day. What are you watching today?
Yeah, I have so much, but let's do something different than you. I'm gonna choose the pound and US dollar.
Okay.
For me, it looks to be reversing from this very short-term descending channel, printing some bullish momentum right now. And also fundamentally, this is a very strong currency pair. On the daily chart, it does look okay. So I think for a bullish play on the 1 hour chart, this looks very, very good with this little bit of momentum that you're seeing. And the second one for me would be the euro and US dollar. Pretty similar scenario. So the daily chart does look pretty good. The fundamentals are bullish, which is good. And then on the 1 hour chart, I'm getting this sort of a, let's say, grab of liquidity. I'm getting a very flat range and then a little bit of a descending channel and then a nice reversal to the upside. So for me, I would pick the pound and the euro for buy setups on the 1 hour chart. But again, today you have Bitcoin, you have the NASDAQ, you have the S&P, you pretty much have a lot of things that are moving. EJ is great. It's looking very healthy right here for a buy setup. So yeah.
Yeah, no, that's a fair list of stuff. I mean, like you said, Bitcoin's looking really strong. You've got a little bit of a divergence here. Actually, I'll just show you a really cool chart I was just looking at myself. The Bitcoin to gold ratio chart, looking like it's breaking out. This is a really interesting kind of quick sentiment indicator. We've added it under our market sentiment tool. So for a while, gold has been significantly outperforming Bitcoin, but we recently just broke out, it looks like, and now Bitcoin is kind of showing some relative outperformance to gold. What that might suggest is that we went from a risk-off type environment where people are more fearful and not willing to take any risk, to now possibly starting a bit of a risk-on rally again, maybe some upside for stocks, and for some of the more aggressive currencies like Kiwi, the Australian dollar, etc. So something to think about there. Miko, chart of the day for you. What are you watching?
Yeah, so I've just hopped into a position Aussie CHF, long on that one. I like this one a lot because it is coming from all-time lows. I do think there's a lot of upside for this one. We've had a really big flush to the downside. I'm anticipating price to recover. Looking at how price normally does maneuver when we do create all-time lows, we do tend to pull back pretty strongly afterwards. So I'm looking to see if I can take advantage of that opportunity and see if price can retrace a lot further. I've entered a trade on the 4 hour chart on this candle, which was actually yesterday, but it still hasn't really gone anywhere since then. But I'm anticipating more upside. I like the opportunity. I feel like the market's quite stretched, and at the all-time lows, my thinking is that there's probably less sellers at these prices, and we could see price push up from that basis. So Aussie CHF and some of the other CHF pairs do have the opportunity to go higher.
Kind of interesting, like pretty much another more oriented towards risk on currency pair, right? The Aussie Swiss, if it's going up, it's going to typically prefer to see stability in terms of global activity. I mean, Australia, right? Big producer and exporter of commodities. And then you have the Swiss franc, which is kind of the defensive currency. So by shorting the defensive and buying the aggressive, it is kind of there's some correlation between global equity markets and things like the Australian dollar, which typically do better in calm waters, if you will. So really interesting to see that you're starting to see some of the same markups, same directional changes. We've had a bit of a shift, right? We went from this everyday selling dramatic moves lower on everything. And then now, again, today, take a look at the Japanese index, or the Japanese currency index, down 1.1%. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day, we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.